Turnaround Tuesday face. Hello, Spencer. How are you? Windsor? Long time attendee, going all the way back down to the LAR days at FX Street. Who else is in the house here today? Richard Watkins. How are you, brother? Paul Franco, I've heard of him. And you know what? If you haven't seen Paul Franco's Morning Edge, you have a dull blade, okay? Don't come into faith with a dull blade. You have to hear Paulie every morning, okay? On the European crossover to get your edge coming in. Okay. Turnaround Tuesday candidate is crude for me today. A couple of reasons. It's reached a lot of fib extension targets. We'll take it a day at a time, but there is potential for a reversal day. And then I'll break it down in time frames. Also, DSI, highest reading in quite some time. Yesterday, Blake sent it to me. It was 85. It hasn't been up there, I don't know in how long. 4 hour. Okay, 4 hour, pretty glaring divergence between the high we had here and the high we had here. Now, it really hasn't done anything wrong. I'd say if I had to look for anything it did wrong, so far there's, besides, and this is the first divergence that we've had in the 1 hour for a long time, because all the way back here was another confirmed high. And I just think it's ripe, so close I could taste it type of thing. Of course, different areas to pay attention to get more technical confirmation on this is back under this box or rectangle or whatever you want to label this formation, back under 6460-ish, call it, which was the high of the move, and we consolidated. And what really will seal it for me is back under this wedge line, which we've had a throw over that's been going on for a few weeks. See, here's a daily, here was a throw over, and here's the formation. So it looks like it's coming in around 63.20, so pretty far away, another $2 away. But your first indication would be negating this, okay? So if this is a legitimate breakout and wherever this measures, if we're back under this level, you have to call it a false breakout, right? Guys, give me a Y if you're with me and understand my rationale, right or wrong, even if crude goes to $69, okay? Okay, so that's just one trade, right? And there's some ideas that you get every day in face that, if you didn't want to pay anything to be a subscriber, you might be able to get by. But why just get by? Why not have a plethora of information to process? Okay, so this is how you do it. You join. I'm refunding $1 if you don't like the trial. And give it at least 90 days. You can't really have a valid view of any service, money managers, etc., unless you give it at least 90 days. And, that's kind of short, too. Anyone could have an off quarter. Has anyone ever had an off quarter in here? Give me a Y. I've had off years. Elena's had okay, there's one honest person. Okay, Scott has. Even Amanda. And we know how good she is, right? Everyone who's in members chat. I mean, when you're not around, Amanda, people miss you. That's all I'm going to say. And of course, it's your lovely personality. What year and what quarter? Rick, you and I will have to get together on Skype and compare. Okay, so let's see what's going on here, just to give you guys an idea in these fairly quiet markets, what kind of patterns in play. We have Greg doing very well on US dollar yen looking for 114. So we'll see if he gets a continuation. Got in at, oh, that was the original. Okay. Blake, still holding this pip all the way back to, for me, it's a lifetime. All the way back, way back to April 4th. Okay. So you tell me that's not a great hold. I've heard people talk about it. Oh, great trade, great call. But you know what makes a difference between the guys who really make money in this business and people that are, adequate and can, do okay, but they'll never get rich. You'll never get rich unless you have more than a great trade. What you need is a great hold. Can I get an amen on a great hold when things are working? I can't tell you how many times, not holding on to a partial has affected what kind of returns I could have. Okay, so you may not be as loaded up as you were building the position, but until someone taught me this, why get out of a trade unless you think it's valid enough for you to reverse there? So how many times do we get out of trades, and we certainly, if we were long and it was working, we certainly wouldn't reverse and get short. So when you look at your positions and you're tempted to take it all off the table, ask yourself that question. I'm long, would I short it here? And if I'm short, would I get long? And if the answer is no, and you have to, walk away from your platform. Leave your stops in, trail them, and walk away from your platform. Or if you're glued to your seat and you can't leave, manage it from a longer time frame. Manage it from a minimum of 4-hour time frame. Because if you're looking at shorter term stuff, you're going to see too many things. They're going to shake you out of the position, and you go, well, I know it's going to come back on me for 20, 30 pips, and you may or may not be right about that. But then you'll turn your head and you're out, and then the market has gotten away from you. So anyway, here's to everyone in here to have the rest of the year not just be filled with good trades, but great holds. Okay? And I think we're going to be able to help you with great holds here. This is just one example. So also, you need checks. Everyone wants another revenue stream. So you're trading anyway. Why not turn that into a revenue stream with rebates? If you're overseas, you could apply the rebate to the subscription and give Trent and Justin a call. You know what's cool about it? They'll answer. It won't just be phone prompts. Press 1 if you want some information in a little while, or we'll call you back. I guarantee you'll get the guys. Test me out and try it. So Blaker, what's happening, buddy? Blake, this crude thing, I was thinking about it yesterday. The Iran news after a $24 rally, okay? Now, it was Iran news that didn't come out until very late in the decline when it got smashed last year from 70 to 42. I didn't learn till later on that there were exemptions for countries to still buy oil from Iran. And, it was that became released, I think, pretty close to the end of the bear move. So just a thought about, people who buy headlines today sell newspapers tomorrow.
Yeah, and as you can see, crude has slipped to the lows, and actually I'm taking advantage of that.
Canada?
Because I bought the dollar Canadian yesterday around the time yesterday, and I sold it just now. Took some profits. I could have had a better entry than I did. My average was in the 50s, so I'm just taking a little off here. Well, taking it off here as we approach this 134, especially ahead of the Bank of Canada tomorrow. But yeah,
Oh.
I mean, crude is, crude oil is, I know we talked a lot about it yesterday, and we're just, we're getting to prices that are going to start having a negative effect on the economy, in my opinion. And,
Oh yeah. My
so,
friends are complaining, they're already complaining about how much it costs to fill their tank now, Blake. And,
yeah,
these are guys that, are, work for corporations and, make, 50, 60 a year. And it matters if they
sure,
commute,
yeah.
and they, an hour each way from work and have to pay that gas, less money to take their sweetheart out on a date too.
Yeah. Well, the flip side to this is that I just took the dollar Canadian off, and here we are, getting close to resistance, and this is the whole reason why I'm like, yeah, well, and I my average is down here, and
Nice trade.
I mean, it's not great because here's what else could happen if we do see a significant move down in crude from current levels. Or let's say even we come back down to test the breakout point at 66.40 or 64.40, then that might be enough to send the dollar Canadian up to 134. But I think things are getting a little, I'm a little concerned about where the dollar is at in relation to a lot of different things, not just the dollar Canadian. But we do have the Bank of Canada tomorrow. So, or is it tomorrow? Wait, yeah, it's tomorrow, Wednesday. Yeah, we have the BOC on Wednesday. So, I really would like to be positioned long the dollar Canadian ahead of tomorrow's Bank of Canada decision. I'd like to, let me rephrase that. I'd like to be positioned on the long side of the dollar Canadian ahead of that. But I don't know if I want to buy it here. I'd rather, try to get another move down here to be long one more time. And I may not get that opportunity. It may maybe by the end of today we could be trading above 134, and then I'm going to have to chase it higher. So, we'll see. We'll see where the dollar Canadian's at and what it's doing from here. A couple things I guess I really wanted to talk today about a setup that I had discussed on over the weekend on the week ahead video. So I'm going to point out the dollar Swiss. The dollar Swiss is actually at highs. We're at 102. Okay, we continue to rally quite significantly. We are past the 127% extension. I went into Friday. Let me point it out here. I went into Friday long dollar Swiss as we were right here. Okay. All right. And then I started then I got the DSI numbers, and I'm like, I'm sorry, it was Thursday, but Friday the market was going to be open. The FX market was open, even though no one was around. But it was Thursday. We were, trading above this. We were in a breakout, and I'm like, I saw the DSI, the Daily Sentiment Index, and it was very extreme. So I took my, dollar Swiss long off, and I'm like, you know what? I'm not comfortable holding it long with the DSI or the Daily Sentiment Index at such extremes. However, I did note on the week ahead video that we could continue to rally towards the 101.86 level, which is the 127% extension, or the 88% retracement longer term. Let me remove this. The longer term 88% retracement at 102.15 or 102.18 or whatever, which we're currently on our way up towards. And here we are. We're at extreme DSI. The dollar Swiss is breaking out, and I started shorting some this morning. I sold some at my cost average right now is 101.94. So I'm out of the money 7 pips. And I'm willing to add a little bit more too as we head up towards this 88% retracement. I'm not going to risk too much. I'm not going to risk too much, more than the 88% retracement, but I'm trying to sell a little bit more as we get up there. Now, Benedict in our chat room, and Benedict is I don't want to tell you guys publicly what bank he trades for, but he's a trader at a bank, and he's in our chat room, and he's been with us for years, and he's such a great guy. He actually went to China a few years ago, and he sent me the oh god, I can't even think of I'm looking at him right now, and I'm the terracotta warriors. He sent me like little terracotta warriors from when he came back from China, and it was really cool. I've got him in my office here, and just a great guy, but really sharp technician. And he goes, Blake, I thought you were never going to short the dollar Swiss because of the carry. And I'm like, yeah, but things happen to be a little extreme right now, and so I am trying to cherry pick a top in the dollar Swiss. Now, a lot of traders will a lot of people will look at what I'm trying to do and say, oh, Blake, I can't believe you're trying to pick a top or pick a bottom. There's the old saying, like, when you pick a bottom, those who pick bottoms have smelly fingers. I guess I don't know what the saying would be if you're trying to pick a top, but so for me, I'm trying to pick a top here just because of extremes. And it's not just because of extreme readings on DSI, it's extreme readings on RSI. I know the market's getting squeezed right now because whoever's short the dollar Swiss, or whoever's been short dollar Swiss longer term, or playing Swiss francs on the long side, there's probably a lot of forced liquidation going on right now, which is totally fine. I'm totally good with it. But I don't mind trying to pick a top or pick a bottom in this environment because we have been in a range-bound environment. So when you're in a range-bound environment, it's for me, it's okay. Now, at some point, we're going to break out of these ranges, and you're going to take the dollar index, and the dollar index may break out today. Maybe if today is the breakout point, it is. And once the dollar actually moves out of this particular range, here's the range here. Once the dollar moves out of this range, you're not going to catch me trying to cherry pick tops and bottoms in the market. But when you're in a range environment, it's like, okay, well, as long as you know what your risk is, and that's the way I look at it. That's the way I look at it right now. It's, if I'm shorting some dollar Swiss, I know where my risk is. I've got my stops already in place, even to my additions. So, like, for example, let me give you an example of this. So, as I explained to you guys, my cost average on my short is right here. So, cost average on my short is right here. This is visually exactly what I'm doing. So, my cost average on my short right here is where I'm in. Now, I have another order to sell more right here, okay? And then my stops are right here.
Nice contrarian trade, bro.
Well, I don't know if it's a nice contrarian trade.
Well,
I might actually get stopped out, but I know what my risk is. Does that make sense? So when I've got my entry, my first entry right here, my second entry is right here, and my stops are already right here.
Yeah.
It's already pre-planned. When you trade the markets, this is where most traders get into trouble, is that they don't pre-plan what they're doing. So, for example, if something is going down and you're like, it's going down aggressively, and you're like, oh, I'm going to buy some here. and then you get into a trade, and then it just continues to go down. You're like, well, if I liked it up there, I'm going to buy some more down here, and then
That's impulse trading,
position.
right?
Well, yeah, because it's you don't actually know what your risk is. You don't know what you're doing. You're just kind of like, oh, I'm just going to continue to buy until it eventually, reverses. It's a strategy. It's actually called a martingale strategy, which is the biggest and probably the riskiest trade strategy you could possibly do. And at some point you'll blow up your account by employing that strategy by not knowing where your risk is. Like,
why did they call it Martindale, bro?
I don't know.
Was it a guy?
I don't know.
Was it a headstone?
I don't. Maybe, possibly, quite possibly. But for me, it's like if I'm going to employ a strategy where it's counter trend, I already know what my risk is. It's like, okay, and just
Martingale, if I remember right, was a mathematician.
Oh.
Well, then that mathematically, you're. I knew it stood for something or somebody, but I'll tell you, probably the reason why they named it that, Steve, is because mathematically you will be knocked out of this business by employing that strategy, right?
Definitely not what you want to follow.
So for me, if I ever trade counter trend, everything's pre-planned. Like I'll give you a perfect example. I picked up some dollar Canadian yesterday. I got out of it. I've already got profits in the bank. All right. I'm shorting the dollar Swiss right now. If I get stopped out at my stop currently of my full position that I'm going to be in, whether, I sold some here, I'm going to be adding here when we get there, then my full size position average will be somewhere around here. And if I get stopped out right there out of my full size position, then the losses that I take will be those of profits that I had made overnight in the dollar Canadian. I'm willing to take on that risk because I've already got profits in the bank. So I can take those types of trades. I have the liberty and the flexibility of taking those types of trades to risk some of my profits. And in this type of environment, when you're in a range type of environment, yeah, willing to take it.
Let me ask you, can I ask you something, Blake?
Sure.
I know you're fading the Swiss here, but does the Swiss, is it a bit of an omen or a foreshadowing of a dollar breakout? Because I mean the formation's so similar, and maybe Swiss is leading the way for a dollar breakout to the upside.
It's hard to put your finger on who's leading right now on this particular move. I ultimately think the dollar Swiss is going higher. Especially, given that you take a look at the European data, it's so poor that the euro is probably going to break down. But that doesn't mean that the dollar Swiss will break out, because if you look at, for example, if you look at the euro Swiss, here's the euro Swiss. We're going right into major resistance. This is all key resistance zone. You can see it all through here in the euro Swiss.
Right.
We could see a rejection here, and the euro Swiss just come right back into this range.
Yeah.
And you're going to see the euro dollar and the dollar Swiss go down at the same time, which is I'm hoping that's going to be the case. But I do believe that the euro is eventually going to trade down towards 110. I think that's where we're going. Doesn't mean that we're going to do it today. I'm just saying that overall, I think that's where we're going. So I don't know if it's foreshadowing, Dale. It's hard. The Swiss franc is a strange animal.
Yeah.
It's a currency that doesn't always have a lot of rhyme or reason. My 2 cents are we're going to have to see some pretty big risk aversion to usher traders back into the Swiss franc, because the Swiss franc is looked at as the ultimate safe haven currency. And there's dollars, there's yen, but man, when the Swiss franc starts to rally, And, under, stock market duress, that means that the market's really quite scared, because that means that the market is willing to pay a hefty rate, a negative rate.
Right. Receive negative
Swiss francs. Yeah. So if you're buying Swiss francs, like as an institution, that means like, I don't care that I'm going to have to pay 1% on my money for this to hold my money in Swiss francs, because that means the stock market's going to lose, 10% in my view. I'll hold Swiss francs just for the safety aspect of it and pay to do it. So
that's your flight to quality in FX.
That is the ultimate flight to quality in FX, is if the Swiss franc really starts to rally. Now that doesn't mean that doesn't mean that we won't get Swiss francs rallying in any other situation. I mean, we could get the euro that bounces back. The euro could bounce back to back towards 113, and the dollar Swiss slump down to 101. That can totally happen as well. But really, the dollar Swiss, the strength in the dollar Swiss is going to come from, or the strength in the Swiss franc, I'm sorry, would probably come due to some risk off activity, which obviously we're not seeing at this moment. But, with stocks where they're at, possible double top, and it's Tuesday, and what they say about Tuesdays, it's possible that we could see some pullback here in the stock market, which could.
Where's your bottom wedge line, Blake?
It comes in at 28.85, I guess that is.
I've seen that number bandied about a lot. If we take that out, then you have something going.
This is where I get more excited about, like, the stock market showing signs of reversals. This 28.60 here, that's that blue line, not that one right here. Let me get rid of this one, because that's like a breakout point, and then we really start coming out of the wedge and making lower lows. So that's kind of what I'm looking at. But good morning, Steve. Good morning, Stelios.
Good morning, Blake.
Good morning.
Good morning. And I know one of the things that I wanted to focus on here on the FACE webinar on the time that I'm here is, instead of going over all of these majors, is I wanted to cover one thing, or maybe two things in particular, that I'm really keyed in on. But if you want the analysis for the rest of the major currencies, make sure you try ForexAnalytix, because all the analysis that I provide every single day is in the basic technical analysis. It's not just me; it's myself and and Amanda and Paul Franco and Steve. We update the basic technical analysis tabs, but my basic technical analysis is there every single day, at least once a day, on every instrument that we cover. So if you want to get my full analysis, it's there. So with that being said, I'm gonna turn it over to you guys. Hope everybody's having a great Tuesday. Welcome back.
Thanks, Blake.
Bye, Blake.
Thank you.
All right, guys. I hope you have a great day, and I hope you had a wonderful Easter holiday.
Thank you, mate.
Thanks, Blake. You too.
All right.
It's an arbitrary day, right, Steve?
It is, isn't it?
Oh, I was thinking about that yesterday. Now, it wouldn't be, because the Jewish calendar is lunar, so it's not arbitrary. So Passover does fall on the same part of a lunar calendar every year, even though the days change, because it's, a 28-day cycle. So Easter should always be right after Passover, in my view, because the Seder was the Last Supper.
If you say so.
Anyway, anyone interested in joining my church, please, the Church of FX Pips and Brotherhood, please write me here in San Diego, and I'd be glad to, give you a sermon every anytime you want one. Huh?
I can tell you as a fact that I've heard some of the religions based on a lot less than that. So.
Okay.
Count me in.
All right, buddy.
How's that guy called, Stelio? That Pastafarian religion?
In Jamaica?
The flying spaghetti one, yeah.
Yeah.
Is that out of Jamaica still?
I have no idea.
No, I think Switzerland or something like that.
Rastafarians.
But yeah, but
Oh,
it's called Pastafarians. Yeah, there's a
oh,
guy
okay.
that actually established like a religion based on some rules like pirates are the best and some things like that. He actually wanted to do, but
You want to get into the FX business, you'll find lots of
actually,
pirates.
actually, his point was that since there is a legal method of establishing a religion based on anything, he wanted to, demonstrate that you can actually make a religion based on anything you want, and legally, nobody can tell you anything. So yeah,
Okay.
they have even won the right to have their IDs, ID photos taken with them wearing a spaghetti. How's that thing called?
Oh, I thought you said Rastafarian. It's Pastafarian.
Pastafarian, yeah.
Okay.
By the way, Ziggy says, I hate Dale's church. I don't understand why we all have to be naked. Right. You can tell it's a slow day because we're talking about
it's very challenging to look into the audience with Ziggy naked, let me tell you. All right, so anyway, what do you think, Steve?
I hope you're not saying that from experience.
Yeah, no, we had clothes on when we met for breakfast, but anyway, Steve, what do you think? Close and crude here, man?
I got triggered on another third, actually.
All right.
You can see it here.
Gives me conviction when you're adding.
There you
All
go.
right.
Because
All right.
you see, actually, I didn't do it manually. I had the order, and it got triggered. That's it. So now I'm 2/3
Okay. Cool.
short. And as you mentioned a few minutes ago, sometimes news spikes prove to be the last move before a reversal. Okay, I'm not saying that this is enough evidence to turn short. As you know very well, I had a plan in advance to be short here, and I got triggered. So I'm already like half a buck in the money on this second third. I had already booked some profits, if you remember, on 1/3 of a position. So this gives me more of a leeway, and depends on what happens from here. I might even actually put a stop loss above the highs. I mean, of course, for me to do that, I would need to see some follow through from this little 4-hour candlestick reversal, because obviously, saying a little reaction on a 4-hour candlestick doesn't say much. So I'm saying in advance, if for some reason, we start dropping and gaining momentum to the downside, I might actually put even a stop loss there. I got barely triggered on the last third. That might be a lucky entry. Lucky.
Yeah, great. No, it looks good. Anyway, Nostra Pinkert saying that this is a top in crude for a major decline to $38 by the fall. Don't take that to the bank.
I'm fine with that.
Okay. All right. So, Steve, if we manage this right, instead of like booking things, but all the different support levels, the resistance levels that now turned into support, pros would just add every time it takes out one of those levels and have a real nice position in.
One example of what you mentioned is, I mentioned that yesterday 1280 was support in the past. We tested it yesterday as a resistance. I said that be careful, I cannot turn bullish, since we're currently now retesting that level as resistance, and we're already like $8 lower in gold. So, gold, silver also once again turning lower, about to retest once again this 1480, 1490 support area. Keep in mind, if we break below there, I'm pretty sure there's going to be acceleration lower. There is platinum as well. Platinum can end up having a double top here, but of course, in order for me to talk about that possibility, I need to see a move below 875. Same deal here with palladium. Again, too early to say that, because palladium can simply come down, retest this triangle trend line, and move higher from there. So, don't jump the gun. But so far, platinum and palladium also finding resistance at previous highs. So keep that in mind, especially about palladium. I talked about it yesterday, saying that be careful, we're testing horizontal resistance here. So we might see a pullback from there. We actually did do that. Another thing you have to keep an eye on is copper. Why? Because copper, within a couple of days, ended up from giving us an intraday false break higher to now testing ascending trend line support. So, from being ready to validate a bullish breakout, it's flirting with the possibility of a breakdown. So copper, in general, as you see, the metals are at quite interesting junctures. Same thing with crude. So, that gives me a little bit of, a hope that, with so many things testing, support resistance areas, we might be seeing more interesting price action in the days to follow. Now, not a priority, but since Blake spent so much time analyzing the Euro Swiss, the USD Swiss, I want to mention here that the more or less the only reason we've been seeing this move higher in the USD Swiss comes from the Euro Swiss and not what Euro USD is doing, because Euro USD has not been doing much. So keep an eye here. Euro Swiss still going vertical. If you see Euro Swiss on the 4-hour chart, we are still trading within this steep ascending trend line. RSI is hitting overbought levels. I mean, RSI hit 85 here. It's diverging a little bit now. We're at 76, while we are higher in price. This is some obvious divergence, although you should not be paying so much attention to divergences that happen in overbought or oversold territories, especially when we're talking about a time frame like a 4-hour chart. So I wouldn't be trading short based just on this 4-hour divergence for the two reasons I just gave. But keep in mind that this move in the USD Swiss comes almost solely from the move, the vertical move from 111.60 to 114.60. So, we've actually covered 300 pips within, like, what is it, 3-4 weeks, which is quite a lot for a pair like Euro Swiss. Okay, so Euro Swiss today is actually breaking above this horizontal resistance area. Of course, it's early on the day, so let's wait for this daily candle to close. If that gets confirmed, keep in mind that we might be opening the door for continuation towards 117, because 117 is another horizontal area of resistance that's quite important for the market. So Euro Swiss definitely something that's in my radar at the moment. I expected some kind of a reaction from here. As I said, it's too early in the day. We might see a reaction from here, but if we don't, then we are talking about a breakout from this range that we were trapped, this 111.80, 114.50 range. We're breaking out from it. Now, if you have a look at the USD Swiss, I know that Blake covered it, but let me also say here that I know that he's looking to fade it and might prove to be like a false move higher, but it looks like as a very significant development from a technical perspective, because I was monitoring this, you can call it a wedge, okay, and we're actually breaking above it. This was also horizontal support resistance area. We're breaking above it. I have to say that a daily close above 119 is actually a major bullish development. Now, if that proves to be a false break higher, I can tell you in advance. But after having spent so much time within this formation, personally, I don't have the guts to fade such a move. Okay, so this is my point of view. Now, having to do with Euro USD, we haven't been doing much, as you see, and my in my position on it, which is as long as we remain between 111.80 and 113.50, there is nothing really to do here. Of course, you need to respect more the potential for more downside, since we've been depreciating for a long period of time. So if you have to be something besides neutral, I mean, that would be short, in my opinion. Which, if that proves to be the case, if Euro USD indeed continues lower, that would probably validate the break higher in the USD Swiss. Okay, so personally, as I said, not looking to fade the move in USD Swiss. That doesn't mean that I don't respect what Blake is doing, because I've seen Blake make trades that initially look wild and crazy to me, and they end up working. So I've seen that multiple times. So he has his reasons, and it is what it is. Now, another reason why I wouldn't want to fade that move is the DXY, because as we said the other day, once again, the DXY seems poised to move towards 97.70 again. And after testing this area so many times, can we get rejected from it again? Sure, of course we can. 97.70 horizontal resistance area, 90.70, 97.87, the 61.8 from this whole move lower, this move that actually started at the beginning of 2017 and bottomed out at the beginning of 2018. So a whole year of a bearish move. And we know that the 61.8 is a major fib level. There's no question about it. One of the most important ones, the 38.2 and the 61.8. Very, very critical fib levels. If you are to trade two of them, that should be those two. And it looks to me like it is what we say. When something fails to move lower, and the dollar tried multiple times after getting rejected from this level to move lower, but every single time it failed to do so. That's why we have a series of higher lows. And the most basic definition of an uptrend is seeing higher lows. Okay, and the very basic definition of a downtrend is having lower highs. So so far this ticks the boxes. So I would be very, very scared that another retest of this range 97.70, 97.90 is has a big chance of actually penetrating through. And if that happens, unquestionably there are multiple stop losses above that area, and we should see a continuation higher when and if that happens. Okay, so I'm quite scared of trying to be short the dollar. Of course, if you want to do so, this is the place to do it. By the way, gold is under pressure. I still hold my last piece here. I'll actually probably trail my stop loss on that. It's at 12.65, so it's getting close to getting triggered there. After the webinar, I'll probably trail it and see how the day is going to move. Aussie is another interesting pair. Aussie was actually flirting with a break higher, at the same time that copper was doing so. But now we've got a confirmation that actually Aussie USD got rejected, because now we've had a continuation, like 3-4 days of continuation. The 200 daily moving average did the work here, because we flirted with breaking above it twice in 2 consecutive days. And when we finally got rejected, we started accelerating lower. That comes as no big surprise, because this is the nice thing with divergences, because at the same time that the Aussie was flirting with a break higher, the Kiwi had already broken lower and was retesting this previous support zone as resistance. So the Kiwi was giving us a hint that perhaps the Aussie is going to fail in that attempt to break higher, and that's exactly what happened. Kiwi, by the way, next area of support is at 66.30. You can see it's the 61.8% fib from this rebound higher. After seeing this breakdown from this triangle, this looks to me like clearly as a corrected move. So I wouldn't be surprised if Kiwi even made it below this 0.64 area to register a lower low from there. So Kiwi still looks quite bearish. Aussie Kiwi, on the other hand, has more or less stalled near the highs, but after such a move higher, just stalling is a bullish sign itself, right? Because despite having stalled here like for 4 or 5 consecutive days, we have failed to actually retrace even an insignificant part of the move higher, which tells me that probably there is more upside. Next area of resistance, I think, is at 1075, a horizontal support resistance area. that is quite interesting up there. Let me actually open the question box as well and see what you want me to have a look at. Euro Kiwi, sure. SNB also made mention. Okay, we have some comments from Zach. Let's see what it is. Okay, he says, SNB also made mention of the fact that they could go deeper into negative interest rates. Blaker, okay, yep, that's definitely important. Sri Lanka church and hotel story was just so bad to see it. Absolutely. Use the Swiss are in an inverted head and shoulders now, but hope Blake can squeeze some pips. I agree. And by the way, what our friend is mentioning here, I have it marked actually on the weekly chart. Thank you for reminding me. This is the inverted head and shoulders formation our friend is talking about, this one. So as you see, if that's the case, the neckline was more or less at 101. We've already broken above it. And yeah, that's another way. But by the way, also notice the break higher in the weekly RSI. You see, there was a very clearly defined descending trend line resistance in the weekly RSI. We've broken above that as well. So several different signals here that would make me very, very skeptical about fading this move. May I know why is pound USD so strong today? Please advise. I really have no idea, and I really couldn't care less. Meaning, if you want my technical analysis explanation, it's simple. This 130 level is a very key level. We've talked about that multiple times. Let's go down to the 4-hour chart. You'll see that the move has been faded at a big extent, but keep in mind that 130 is a key area of support, and it's still getting defended. Keep in mind, though, that when we push through this zone, if we do push through this zone, we should see some acceleration lower because there are, it's being defended again and again and again. But if this defense fails, then the market should move lower in an accelerated manner. Now, the question we had about Euro Kiwi, it's a good opportunity to cover the crosses. So let's take them one by one. Let's start from the Euro crosses. So Euro managed to more or less, after a little false breakdown from this horizontal support area, it's rebounding. So be a little bit careful here. If you wanted to take the channel interpretation, we're testing this channel as resistance. Now, if we do break above this level, then the whole attempt to move lower proves to be a false one. So I would be very careful in the opposite direction. And this is Euro Kiwi. Euro Kiwi said since the beginning looks much more clear, much easier to read, because we had a very well defined descending channel. Once this broke to the upside, we kept seeing a decent bid on the pair. We're still moving higher. Currently flirting with a break above the 61.8. If that's the case, the next area of resistance is the confluence of the 200 daily moving average and the 78.6, which comes at 170. So that's my view on Euro Aussie and Euro Kiwi. Now, having to do with Pound Aussie and Pound Kiwi, Pound Aussie, a nice reaction to the upside as well. As I was monitoring this descending channel, because simply this move lower definitely didn't look impulsive in any way. Now, should we be doing something with this? Not yet. Not yet. I would want to see a move above 184. This confluence of this horizontal support resistance area and the descending channel, then and only then, I think, playing the breakout to the upside and the continuation higher would be interesting. Until then, there's not much to do here. There's still also a trend line resistance in the RSI. You can see it here, which is still in play. Now, Pound Kiwi, another interesting one. You can see that it's coiling within this wedge. The wedge's resistance also confluences with the 61.8 of this move lower. Both can be found at 195.79, 195.80. So pay attention to that level. If we do see a break higher from there, then I think a continuation higher to retest this area just above 2 is probably a good play. Otherwise, a break below this triple confluence of supports, it's this ascending trend line support, the 50 daily moving average, the 200 daily moving average, they both those and the ascending trend line support are found at 192.50 would point to another direction, lower of course. So this range is being, since it's a triangle, it's being reduced by the day. So sooner rather than later, we should see a breakout one way or another. Probably buying or selling the breakout is a decent technical opportunity. Steve, hi, could you tell your opinion about pound yen and pound Aussie? Okay, for the pound Aussie, I already covered you. Now having to do with the pound yen, I said it yesterday, probably you weren't here. Nothing has changed since yesterday. Clearly, the pound yen is consolidating in a rectangle. The boundaries of which are 144 is support, 148.50, 148.60 is resistance. I know it's quite a wide range, 460, 450 pips. I wouldn't be doing much as long as we remain trapped within this range. I think ideally, you would want to see a breakout, either a breakdown below 144 or a break above 148.50 to act. Now, if you are, so committed in doing something shorter term, you can have a look at it on the 4-hour chart, in which case, for example, you might decide to reduce the range by viewing this as a triangle. Okay, in which case you can say, okay, I want to do something if I see a break above 146.60 or a break below 144.20. Since it's so close to 144, I would still keep the lower boundary at 144, but you can reduce the resistance boundary to 146.50. So in essence, reduce the range to 250 pips if you want to act sooner and you don't want to wait until 148.50. So 144, 146.50. I think doing something while we remain between those areas makes no real sense. There is no risk reward. There is no, there is no bias even in a shorter term time frame. So, I would definitely advise against that. Okay. My pleasure. Let me see what I've missed so far. I believe the very best money is made at market turns. Everyone says you get killed trying to pick tops and bottoms. They also say you make all your money by playing the middle. Well, for 12 years, I have been missing the mid in the middle, but I have made a lot of money at tops and bottoms. Paul Tudor Jones. Yes, Joshua says that. That's a very well-known quote from Paul Tudor Jones, and nobody, refutes that. He's a very successful trader. Although, keep in mind that it is easier having a trend following system. There's no question about it. And also keep in mind that not all trading styles are suited for everybody. So, because there is one person that makes great money and there isn't only one person by picking tops and bottoms, people that are also using harmonics do that, because keep in mind, harmonics, for example, is a discipline of analysis that more or less focuses on catching reversals. Okay, that doesn't mean that this is a suited tactic for everybody. So I agree with you. I know a lot of people that actually like to play reversals and they do well, but especially for amateurs, or anyhow, especially for people that are not really experienced, trying to catch tops and bottoms is usually a tactic that leads to disaster. Okay. And I think we don't disagree on that anyhow. You just mentioned what Paul Tudor Jones says, which is true. Okay. So I think I've covered. Quotes, are you here? Do we have an interview? Nothing to add, by the way, having to do with indices. We can speak about Aussie and Kiwi yen, though. So, one, Aussie yen at a very key level currently. That's why I wanted to remember to talk about it. If you look at it, both the price and the RSI are testing previous support trend lines, previous resistance trend lines, sorry, as support. So, if we want to see a continuation higher, Aussie yen has to find support more or less where we currently trade. Now, Kiwi yen, on the other hand, is finally breaking below this 74.80 level. It's actually now accelerating lower, which actually opens, as I had drawn like several days ago, the downside for a continuation lower. The first area to watch is the confluence of the 38.2% fib with this previous low. And the next area of interest is this confluence of the 61.8% fib with this horizontal support resistance area. You can see how many times that area had actually acted as support in the past 1, 2, 3, 4 in this occasion. Okay, so levels of interest for a continuation lower 74 and 72.25. Okay, as you see, RSI on the daily also confirmed that rejection. We tested this trend line resistance in the RSI multiple times, and we failed in every occasion to break above it. When you fail to break higher, what happens is that you continue lower. So let me also cover the CAD yen. CAD yen definitely more complex here. It still oscillates around this 61.8. Support is at 83.30. Resistance is this confluence of resistances at the 78.6% fib and the 200 DMA. As long as we remain between those two areas, more or less nothing to do. The fact, though, that it's holding after breaking higher from this channel, makes me maintain a little bit of a bullish bias. So, if I have to do something with it, would be to be long. I was actually long. I'm not anymore. I got stopped out of the break even, so I don't have a position anymore in this one. But as I said, from in comparison to the other commodity currencies against the yen, it looks one of the better ones. Keep an eye on the dollar. By the way, the dollar at highs of the day, as you see. Okay, we have another question about euro yen. Absolutely, let's have a look at it. Whoops. There we go. So euro yen. Be a little bit careful here. If it wants to move higher, it should do so from here. We broke above this little descending channel. We've come back to retest this confluence of supports roughly at 125.30, 125.40. Previous channels resistance might act as support. So, if you want to be long against, this area, let's say against 125, it's a good risk-reward ratio for another retest of the 61.8 and the previous high at 127.60. But if we slip below this level, then I think that we should be moving lower, perhaps towards 122 again. Having said that, I think there are better opportunities out there because, as you see, the price action is more indicative of a consolidation and nothing really to write home about. I mean, better opportunities out there in the market at the moment. I think you should focus on other stuff and not trade euro yen. At least that's my point of view. USD MXN, by the way, another one I wanted to mention. USD MXN so far found support for a third time exactly at the same level. Now, is this a triple bottom? Absolutely not. Because in order for this to be a triple bottom, we would have to break above 1947. But if you want to go down to a 4-hour time frame, then you can perhaps want to view this as a potential double bottom, in which case, a break above, let's say, 19 would suffice. So if you want to, look at it at a shorter time frame, then perhaps you want to view this as a rectangle, in which case a break above 19 should take us there. Okay. So keep a close eye to USD and if you're looking to do something with it, very well-defined levels, and should produce some continuation one way or another. Coach, I hear you're
Yes,
back.
buddy.
I'm guessing we do have an interview. Am I right on that?
Yes, one of my favorite guests, Alba Puero, live from Barcelona. I think we'll probably hear about wolf waves.
Oh,
Do you
Barcelona.
do you know wolf waves at all, Steve?
No, but I'm definitely a huge fan of Barcelona.
Okay.
I've been to
Tapas.
I've been to Camp Nou to watch games multiple times, and I'm looking forward to
Okay.
going there again.
All right. Yeah, people have told me I need to go visit that place. So
You absolutely need to do so, and don't forget to visit the Camp Nou Museum as well. It's magnificent. Even my wife liked it. That she has no particular interest in football, whatever you call it, soccer. You get what I mean.
okay. All right,
Yeah.
Steve. Thank you very much, partner. Alba,
Thank you, Coach.
I'm now making you the presenter. Welcome back to Face. Really a pleasure to have you back, Alba. You Top Gun trader, you. How are you?
Hello.
Hi, Alba.
Hi, Dale.
How are you, my trading warrior sister? You doing okay?
I'm fine. I'm sorry to disappoint, but I'm not from Barcelona. I'm from Madrid. But I agree with you. It's a
okay.
beautiful
Well,
city, awesome city. Very
Barcelona or
new.
Madrid?
Madrid, yeah.
Oh yeah,
But
you like it?
right now I live on the beach. I live in a place called Denia. It's like a paradise.
Wow.
And well, that's where I
That's
live.
nice. So how much
Yeah.
can I pay for rent to live in that neighborhood? In dollars.
No, but you have Ibiza very close. You can take a ferry to go to Ibiza and
Oh wow.
spend the weekend.
I'm dreaming, and I'm going to live a few of them out. So who knows, Alba?
Who knows?
Maybe this summer.
You're invited here. You and all your team.
Oh, great. I brought up wolf waves, and before we get into what's on the menu here, I would just like to say that your hit rate on your forecast every time you've been here in Phase has been outstanding.
Well, now you're making me nervous.
Well,
Because
well,
every time you fail, this is the fourth time.
But it has been, right? I mean, we a few days after the interviews, things that you talked about began to manifest, even the same day. And in fact, the one I really remember was your bearish call. I think it was in NASDAQ last time we were on, and it was in the fall, right?
Yes. You know that wolf waves are normally very fast. The reaction is very fast normally.
Okay.
So I have some things for you today, but
okay.
I don't know how do you manage to schedule our meeting always in maximums.
Because the market won't die, Alba.
Yeah.
Maybe that's why.
Okay. Last times we had these wolf waves or the bar patterns, the bump and run reversal pattern. Do you remember? There was a leading phase and then the bump phase. It's more accelerated. Well, right now we are here. This gray area for me is very difficult to trade because everything comes very erratic and the movements are not so clear. We are without any trend.
Have you ever seen a recovery like this, Alba, before, where we come off a low and there was maybe a 2-day pullback after the low, and that's it? No correction, only sideways action before the next wave to new levels?
All I know What?
Is it unusual to you to see this type of
It's usual for me, not in these time frames. This is daily chart.
Right.
But we
Right.
can see these recoverings maybe in 1 hour, 5 minutes, 15-minute charts. But in daily, it's like crazy. And all I know, Dale, in all these 6 years I've been trading in markets, is that market, it's all about balance. And if it doesn't balance itself sooner, it will make it later. And that's why, for example, the bump and run reversal or this pattern, the wolf wave, it's important. Because with a normal speculation, everything's okay. No speculation, moderate highs and lows. But if it does like this, if it does a bump like this, the correction would be the same, in fast and violent, sooner or later. Okay.
Okay, so we're out of balance right now because there really hasn't been any, decent bid retracement all the way up. So that makes the market out of balance for you.
This is Dow
correct?
Jones, okay? Yeah, that's you
Okay.
just say it. This is Dow Jones. Last time we talked, talked about NASDAQ, got the double top, and this wolf wave. The market has recovered. We have these price structures. For me, are important. Now we see the daily chart in Dow Jones. The market is trying to break it up, but in three times right now, it doesn't break up this resistance. So this is now the area we are going to see this and this. Okay. In S&P 500. I have one wolf wave, but this wolf wave is smaller. If you see, for example, in daily, you see this one is a smaller one, and I have marked this area in green.
So the wolf wave has completed.
No, it's not completed. It just appeared.
Okay.
And now the wolf wave is telling us that sooner or later the market is going to fall, and it's going to fall here and here. This is the take profit one, and this is the take profit two. I work with these two take profits. I calculate them. The original wolf wave of Bill Wolfe says the target is the union of 0.1 and 4. But if the market goes on and on, this line goes down and down and goes to infinite. So I prefer to work with some targets, concrete targets, and manage the position than open a trade and let it go. I have marked this one, this area in green, and I'm going to show you this, not this. This was the S&P in 1 hour, the 22nd of February. If you see the image, you can tell me if you see it. Okay, I'm going to open it.
Yeah.
This area I mark above the wolf wave, 0.5, is the testing area. Right now in maximums, the wolf waves are against trend. And right now the trend is very strong. So it has possibilities to test the maximums. So I mark this one, and I consider the wolf wave failed if it goes above 0.5. But I mark this area to see if there is a fail over here, a weakness in the blue area. You see here the evolution. It went there, and then here now it was the fail, a double top, and then that was the entrance. When the price goes again in 0.5, it's again active, the wolf wave. Okay. And now you see here the evolution, and that was the end of the reaction, and then it comes again the jump. So this is now the scenario I consider we are in maximums, but the 50 moving average is not lost, and for me it's very important, at least in 1 hour.
Where's it coming in now, Alba, the 50-day about? Where is it coming in?
What do you say? What's it coming in?
Yeah, the price. Where is the price of the 50-day right now?
Here.
Yeah, 20. What?
The orange one.
Yeah.
Is 2,900 more or less.
Okay.
But
Okay.
it's very
Thank you.
important for me now. The moving averages are getting closer, and it's very important for me to lose this area. If it lose this area, I don't know if I can draw. I think I can draw. No, I cannot draw. But
Okay.
if it loses this area and makes a lower high, that
Yeah.
would be great to open shorts. I think this area is a great area to open shorts and maintain them. But I cannot open it right now because there is no rejection pattern. We have only the price in the area. That's
Right.
no reason, just this reason to open shorts.
Right. So you need to
we
see
have
some negative price action.
Yeah. Yeah.
Some type of reversal candle or something.
Yeah, or maybe
Yeah.
testing this area and rejecting, and then the lower high. And as I said, mainly lose this 50 moving average in 4 hours. It's the 200 moving average in 1 hour. So this is the key to open shorts and have a correction. And I have here some details. It's very interesting. This picture is not mine. It's from a trader. It's called Trendiometry. You can call him to do a face with him.
Okay.
And he shows us here. Do you remember, Dale? We have the overlay chart that compares two actives, maybe for example gold and the S&P or
Okay.
USD.
Yeah.
Okay.
Yeah. Like a correlation chart, a comparison chart. Okay.
He's comparing the Russell 2000.
Yeah.
That it has is famous for being the weakest index of Wall Street, and the S&P. And right now, he marked some divergences that appeared in the history of the charts. We have here a very divergence between the two indexes. This is Russell and this is the S&P. The blue line is the S&P.
Okay.
And the first signal is a 1% of divergence. You have the movement. The next one we have here a 2% of divergence and the movement. And right now we're at this point.
Massive. 7%.
Yeah, it's a massive divergence of 7%. We are maybe heading some very, very strong fall in the markets. And you know, when it's time to sell, we need to find weak stocks,
the relative weakness.
Things. Yeah. To look for weakness, and because they are the first one that show weakness, and now it's showing that.
So you mean, for example, the Nasdaq 100 is making all-time highs, but a lot of the stocks within it, like Facebook, Amazon, are not at Apple. They're not at all-time highs, even though the Nasdaq is.
Netflix, they are not making all-time new highs.
Right.
But Nasdaq is composed by a lot of stocks.
100, I'm talking about the Nasdaq 100.
And
okay. I have one question for you before you go. This is compelling, but you know, I've noticed, and I talked about this today. It's one thing to have a great trade, but what really separates people from having a lot of prosperity is having a great hold. Okay, so I've noticed you have the discipline to hold to targets. What advice would you have for people? A lot of people don't. They, they cut their profit short, and instead of having windfalls. Do you do it by managing from a different TF time frame? Or do you do it just because you have so much conviction about the outcome of your wolf waves that it's easy for you just to sit and watch profits go away for a while, and knowing that longer term everything's on track? How do you mentally prepare yourself for a great hold, not just a great trade?
Yeah, this is something that cost me a lot. And wolf waves also, you can trade them in 1 minute, for example, and doesn't cost a lot. But if you trade something at 1 hour, for example, or this one, 4 hours, you have to maintain, as you said, all the positions. This is a change of mentality, and this goes a lot with the personality of the trader. Some people want to do scalping because they are nervous and they don't want to wait and they want to make fast money. I am not good at scalping. Well, not as good as a swing trader, but that's not simple, and the patience costs, and that costs me a lot. I just learned to wait because I knew that if I close the positions over here, the market then goes like that. And after seeing it a lot, I have learned to wait until the target comes. And if somebody's going to speak, like, for example, Powell or Draghi, I just manage the position. And something that has served me a lot and have helped me a lot is I work with CFDs, not in futures. So I can open a part of the contract, not all the contract. I can open, for example, a half of the contract and close partially. And that's a great thing that helped me mentally and psychologically not to be so obsessed with the money and with the time of consecution. And
what a great mentoring. You're a natural teacher, Alba.
Thanks, Dave.
In case you didn't know it. Okay, so S&Ps, we're kind of getting the picture of where we're at here. What else did you want to talk to us today? I mean, you know, this is a big deal you're talking about here. I'm not diminishing it, but I'm wondering if there were any other, usually you have a few different instruments, but go ahead with your presentation.
I have, but always remember this is the testing area. The price can go up here, but if in the short term it goes back to 0.5, the wolf wave is still active, and we'll look for the targets here and here. Just remember that, okay?
Okay, well, and you know what, everyone, Alba, I think the consensus is new all-time highs in S&Ps is a layup. It's like a lock. People are saying it's a lock, you know, to over 29.42. And when everyone thinks something's going to happen in the market, I get a little skeptical. But your work also allows for a new all-time high, doesn't it? Like the NASDAQ 100 already had. Is that true? We can make new all-time highs here. With your zone.
We can, but we just wait for, in this area, for a double top, for example, of what I'm telling you. If it's going to a lower high, then combine it with Fibonacci, for example, and goes with these targets.
Okay. Thank you.
Gold, I had this wolf wave that it's now losing 0.5. So it's failing. This wolf wave was great because if gold continue high, then it supports this scenario, the low scenario, the short, scenario in S&P or in Dow Jones. But now it's failing, and we have here a triangle. Do you see it?
Yes. Measures 1220, I believe.
It's huge. The projection is huge, and I think
1220. 1230. Yeah, right there.
20, 24, 25.
Okay.
More or less. It's huge, and if the price again bounces and goes in, it can go to these targets. But now it's failing, and I'm going not to have it in mind. I just wait to. I'm not sure even in gold. I'm waiting for the US movement and the rejection, because if it does it, then the gold can go over here and go down again in the future.
Okay, so you think that if the wolf wave, we finally get this sell-off, which you think could be dramatic in the S&Ps, there'll be a flight to quality into gold. People will buy gold. Okay.
And right now, this area, the 0.5 area, is the support area. It's a great support, this one. And I'm waiting for the daily close of this candle in daily, because maybe it can recover all the body and close gold in this area. If it does, then I will have in mind the bullish movement. So I'm waiting for the gold, and because this movement was very violent, as well as the euro dollar, for example, we're going to say. So I'm waiting if the daily close of the candle recovers and closes over here, it could be great. But right now I'm out. Okay.
Okay, got it.
Okay, British pound was holding because of this daily chart of the 200 moving average.
Yeah.
But now it's losing it. In FX Street says the volatility in the pound fell to yearly lows. We have a very low volatility here in euro dollar and in British pounds. And when this comes, they said that could be in for a big move soon. And this has manifested just right now when Estelios was speaking. You see this great movement. So we have at 1 hour, we had, because it's completed, triangle. It costs a lot of days to complete the triangle. And now
we're near objectives. Overshot them.
And now in daily, well, I don't know if you see another triangle.
I do.
That the base or the support includes with the 200 moving average. Now it's breaking it because the dollar make a violent move up. So the pairs against dollar are make this violent move down. And we will wait again. I'm going to wait for the daily close to see if all the pairs close below this moving average. For example, the British pound, as Estelios said, with the British pound New Zealand dollar or the British pound yen, I don't know what pair, I cannot remember right now, but I feel like a reverse movement is possible. Here in euro dollar also, if we see weekly, we have a huge wolf wave. This wolf wave is huge, and one of the targets is completed, and now it just the other ones left. It's in 1.10 and over there. I have the chart or I'll upload the chart later if you want. So the reverse movement in pairs against dollar, it's okay in the short term. So let's see the daily close to see if it's okay to continue the shorts, and then wait for shorts tomorrow, for example, in lower time frames to look for shorts in other patterns. Okay. And I had New Zealand CAD, the same scenario of support with the 200 daily moving average. And like a double top with a small, very light divergence, very steep divergence. You see it? And I'm waiting for the breakout. I'm just waiting for the breakout or a lower high to combine it with Fibonacci. But this is a strong support, very strong support. And if it goes up here and turns down, you have yes or yes to take partial benefits here. Yes. Or in the area of the 2000 moving average. I don't have clear scenarios just because the market is very strange right now, and we are looking for a movement, a strong movement in the indexes, and I don't have any clear scenario like the other times I've been with you. But I can say with USD yen, it's the same as the S&P and Dow Jones. It can test this area, but if the indexes fall, the USD yen is going with them down. So Estelios said also British pound yen, no, New Zealand dollar yen. It has a better movement. I don't have the pairs against yen with various movements except this one, that Estelios said. This 200 moving average in daily is very is the key, but also in weekly, we have the 200 moving average here. So that's the reason USD yen is not going up the same or as fast as, for example, S&P.
Yes, good point.
But the same, I'm just waiting here and the S&P rules. If it goes down, then we can manage other positions and look for scenarios. But right now, gold is testing the supported area. This is in maximums. We can not open right now anything. We just wait for the price reaction in the areas.
Okay. So, Alba,
Mm-hmm.
you never failed to disappoint. What a great presentation.
Thank you.
You know,
I hope it goes well, but if it does not,
yeah, everything and anything can happen, Alba, but your work is outstanding. Thank you so much for edifying our community. And the best way for people to find you, if you want to show your blog site or anything else like that, now would be a good time to do it.
You know, my Twitter is
Yeah.
Albitomix at
Yes.
Albitomix, and here I have my blog, my website, and also Miss Wolf Wave. It's me, but only focus on Wolf Waves.
Okay.
And I have the website of Wolf Waves that has some articles in English, but anything they need, just write me an email or just translate them, and I'll help. Something. This is Eurostocks. Sometimes the change in the trend doesn't overcome just because a wolf wave appears. Sometimes when the targets are completed, the price goes again to the other direction. And now in Europe, we had bullish wolf waves completed, and now we are also in a different way, but we are also in resistances.
Okay, so you had different forces around the world are at levels that people should be careful about right here. Bottom line, right? So thank you, my trading warrior sister, for hanging out with us today.
Thank you, Dale. Thank you.
May pips rain down on you this spring, so you have a garden full of cash. You grow a garden of cash.
I have a lemon tree.
Oh, okay. Well, hydroponically or something, a garden full of cash. And I can tell you what, if you have a lemon tree, just knowing your attitude towards trading, which is a metaphor for how you look at life, I believe that you turn lemons into lemonade. And I'm really glad our paths crossed, Alba. I'm glad to call you a friend.
Thank you, Dale, my trade warrior brother.
Okay, everyone,
We'll
that's Alba. Okay, David says thank you. Everyone loved you, and good hunting, Alba. And I'll probably see you on Twitter after a lot of your calls manifest.
Yes, we hope so. It will take time, maybe more time than the previous one, but
we've got time.
Okay, goodbye, everybody.
All right, see you, Alba.
See you, bye.
And remember, everyone, don't just count your pips, count your blessings. Having guests like Alba is definitely a blessing for me, and I think everyone's ears who she touched today live, and the video will be out in a few hours. So good hunting the rest of the day. Go join Blake and the guys in the private chat, and I'll see everyone tomorrow. Adios. Thank you, Alba.
Thanks, bye-bye.